To you as always. Interesting action in today's market with all this good news of the vaccine finally being administered here in the US, that the S&P is kind of flat, having opened nearly 1% higher. Is that a sign that all the good news is kind of priced in the short term?
Well, I mean, we can say that a lot of good news has been priced, that's for sure. As we know, I mean, obviously for the last 6 weeks, we've had just a whole flurry of, I would say, good news that's hit the market. Market prices have recognized that appropriately. The rotation that's been going on kind of reflects the reopening story next year that's being embraced. And yeah, we're from an S&P 500 level standpoint, we're pretty much at the upper end of what we can justify without starting to really get speculate on just asset prices sort of bubbling up. And oh, by the way, it's the end of the year, so you're going to start to see, I think, in the next couple of weeks, people pare back on some positions as they typically do as we get ready for next year. I mean, this is, I would say, if there's one thing that clients share right now, investors share, is just sort of exhaustion. It's been what a year this has been, and so we may just kind of limp in to year end as we just sort of go sideways from here.
I think it's not just investors and clients, Mike, that are feeling that. Everyone is. Do you still favor cyclicals over the kind of growthy tech stocks that have done so well in recent years? And if we do see a sort of meaningful pullback for the S&P 500, does everything get hit in that pullback, given that cyclicals have played catch-up in the last couple of weeks?
Yeah, I think it's an interesting question. I mean, look, first of all, we have to acknowledge that the last 6 weeks, I mean, this is really unprecedented in terms of the speed of the move we've seen, kind of going into the election and then past. And so some give back is expected. And I do think it'll be sort of broad brush if we were to get a pullback, because we just, got to take down sentiment, positioning got a little extreme. It will be kind of a reset. And into that reset, we do like cyclical stocks that are levered to the reopening, but we do also like growth stocks. I think what's going on, Wilf, is that there's a shift in the growth world that could happen next year that maybe might surprise people. We're still of the view that interest rates at the back end, will rise next year as the bond market kind of joins in the party on the recovery story. And that will put pressure on what we call really expensive growth stocks, not all growth stocks. Like growth as a category, high-quality growth stocks should always work over time. We just think you need to be more attendant to valuation. And we think that catalyst for valuations perhaps coming under pressure will happen as rates go up. And we expect that to happen in January and February as it becomes clear the vaccine's being distributed, being tolerated, that we get a fiscal stimulus package, which we still expect sometime between now and Inauguration Day or shortly thereafter. And those are all positive catalysts for rates to rise and puts a lid on some of those high multiple growth stocks.
Shepard Smith here. Thanks for watching CNBC on YouTube.